Hey guys, welcome back to another video. Portfolio looking great today. We actually did go red for a little bit, surprisingly, first day in a very long time, but now we're green, up almost 2% on the day, so very happy with that. Thank you guys so much for the support. We actually reached over 5,000 subscribers. Thank you guys so much. I very much appreciate it. I see your guys' comments down below. Thank you for leaving the nice comments, all the support. I'll try to get back to as many as I can. Thank you guys so much. And what we're talking about in today's video is number one, market updates and where we're heading in the overall broad stock market. And then number two, this stock has a chance to spike 30% before the end of the year. I think it wouldn't be crazy at all if this stock is a 20 to 30% compounder for decades to come. So all that I ask is if you do enjoy this video, be sure to smash that like button. Also subscribe to the channel. Let's get right into it. So Taco actually got us all yet again. Maybe you saw it coming. I kind of did. But Tehran suspends talks with the U.S. over Israeli attacks in Lebanon, Iranian media reports. So Trump says he couldn't care less about Iran ending peace talks. Well, I care a little bit. When my oil, when my gas costs $8 a gallon, I tend to start to care a little bit. USO is up 5% today. This is insane. Oil seems like, when is it going to go up 10% again in a day? So a lot of consumer stocks are getting hit very hard. Oil is becoming more expensive. Gas is becoming more expensive. My car has been on E for a very long time. Been sitting here for a while on 60 in the Fear and Greed Index, where it seems like we're hovering between the high 50s and then, maybe 65, 70. But we're really not pushing into that extreme greed territory, which I see happening. I don't see this happening because we're in a K-shaped economy. The rich are doing fairly well. They are invested in stocks, but the poor not doing so well. You're not even able to fill up your car. I got an ad on the Fear and Greed Index that I thought was very interesting. We saw Hims and Hers. I talk about that stock. I think it's up maybe 12, maybe 15% since I talked about it. So I hope you guys invested in that. But they actually gave me an ad for Wegovy. I don't think I'm going to be using the Hers Wegovy, but I can see this ad working. We see it's $39 for the first month if prescribed, even without insurance, which is, that's very attractive. I think if you are, looking for weight loss, that's a pretty fair price to pay. And then it's $149 a month after that. So it makes some sense to me. I think that Hims and Hers is going to be a great buy in the long term, but that's not what we're here to talk about in today's video. And this is very much what's going on right now. Many economists reference the U.S. economy as K-shaped in 2025. It currently still is, illustrating how higher earners were doing all right, continuing to spend and driving economic growth while lower income Americans pulled back. So while most, higher income Americans can afford to put some money away in stocks, which the stock market's doing amazing right now. Their money's growing at a faster rate than the gas price, basically, is what's going on. And the lower income Americans' income is dropping faster than the gas price is rising. So not a good combination, and that's why we're in the K-shaped economy. Consumer stocks are also great opportunities. Celsius, they're down 7% today on the news that oil was more expensive. 7%. This is a volatile stock, but do they deserve a 7% drop for oil rising in price? That's an overreaction if I've ever seen one. This stock is known to overreact. We see Celsius makes an energy drink. This stock drops like 20%. But basically, Celsius, I might make tomorrow's video on that. This is an insane buy right now. This is a generational buy, Celsius. Is oil going to stay expensive forever? Probably not. So is Celsius stock price going to go back up with the growth that they have and cheaper oil prices? Probably. Elf as well, I think very good buy. This is a stock that could 3 to 4x over the coming years, so very cheap right there. But this is what we're here to talk about today. It's Meta Platforms. I've never talked about this stock before. It's very well suited. I think that it's down 5% today. This is the last Mag 7 CapEx straggler. They're struggling compared to other stocks. You look at Microsoft even, that one's taken off year to date. Hope you guys invested in that when I called it. But also Amazon, hope you guys bought that too. Apple, Google, all of these companies have been doing very well, but Meta's actually red year to date still. If you look at their forward P ratio, this is 18.32. Their 12-month trailing P ratio is pretty much 23. Market cap is $1.52 trillion. This is a huge company. Obviously, you guys know what Meta is. 52-week low is 520. 52-week high is pretty much $800. We're sitting on the lower end of that right now. I think this is a good entry point in Meta stock. Their income statement, I rated this a 9 out of 10 for a few reasons. So revenue's up 33%. That's insane. A company at this size growing revenue by 33% with a forward PE of 18. You're telling me you have revenue growth of 33% and your PE is 18? I'm gonna just let that one sit. But total costs and expenses, this is 35% growth, which that's a category you do not want to see grow. That's why I put the number as red. So their total costs and expenses, it would be fine for it to grow at 33%, The fact that this is at 35% and then their revenue growth is at 33% is not amazing, but it's also not the end of the world. It's the first quarter for Meta, which usually they tend to, skyrocket a little bit. Second, third, and fourth quarter, they're pretty cyclical on their earnings reports. But net income for them, 60.85% growth, amazing. EPS growth, 60% as well, amazing. 9 out of 10 income statement would be a 10 out of 10, would be an 11 out of 10 if their total costs and expenses grew at 33% or less. CapEx, this is the problem for Meta. And this is the problem for Meta because, their CapEx number is insane. You see 2024 to 2025, we almost doubled in CapEx spend. Quarterly, pretty much almost a double as well. Very high growth for CapEx, something you don't want to see in high growth. But we see their CapEx, and this is the problem because what are they doing with it? They don't have a ton to show for it. So that's why investors are very scared to invest in Meta because Google, you can see directly what they're spending their CapEx on. Amazon, they're building out AWS. Microsoft has Azure. They have all of their businesses that they're spending their CapEx on. Meta does not have the same things to show for these three companies, which is kind of scary as an investor. But this is also losing Meta a lot of money. It wouldn't be right if I made a video about Meta and didn't talk about Reality Labs. So Reality Labs, formerly Facebook Reality Labs and Oculus VR, is a business and research unit of Meta Platforms, formerly Facebook. And what they do is virtual reality and augmented reality hardware and software. We see Meta's Reality Labs lost over $4 billion in the first quarter this year. In Meta's first quarter earnings report, the company said Reality Labs recorded an operating loss of over $4 billion while bringing in $402 million in sales. So not great ratios. And we see that they've actually accumulated over $80 billion in total operating loss since 2020. This has lost Meta a ton of money. And what my thesis is on this is that Meta isn't stupid. I've made a decent amount of money betting on Mag 7 stocks or Mag 7 stocks not being stupid. They're not dumb. They know what they're doing. So Meta, I think they will shut this down or throw less money at it. I see either one of these happening because I just don't think, the stock price is bleeding. People aren't feeling great about Meta. Cutting this would easily, boost the stock price 10, 15% overnight. So I can definitely see that happening. When we look at their segment results right here, we see that advertising is pretty much their whole business. Other doesn't make up for a lot, but that has grown pretty nicely. But we see family of apps revenue, same thing. Reality Labs revenue, whatever. But we see our total revenue looks very nice, very good growth. And we do see that it does grow cyclically. First quarter, it tends to drop a little bit. Second quarter, third quarter, fourth quarter, it rises accordingly. We look down here, and I think it's very funny that we see their operating or their total income from operations is their family of apps operating income, and then you minus Reality Labs operating loss, and then you get their total income from operations. That's amazing. We see their operating margin is 41%. I just don't see how Meta can keep doing this. I think they cut Reality Labs, their operating margin skyrockets, their total income from operations skyrockets. It doesn't skyrocket, but this is a 20% increase. That would increase the stock price by who knows how much. That's an amazing thing for a company making this much money. So I'm optimistic that this will happen eventually, but not 100% sure. Net income in millions. This is the most money ever that Meta has made. We see a one-off in quarter 3, 2025. Not worried about it. Big tax bill. But we do see quarter 1, 2026. They made a lot of money. This is the highest net income Meta has ever had, and their stock price is relatively cheap. Their advertising revenue by user geography. If we look at the growth rates for all of these, it's amazing. Rest of world is up a very nice amount. You almost double right there. Then you look at Asia Pacific, like 30% growth, 40% growth. Europe, you look at the same thing. This is over 50% growth. US and Canada, we see same thing. This is over 50% growth. Very impressive from Meta. They're growing very fast in every single segment of, international is what these companies are trying to get into. Meta's doing it very impressively. So I think we see this continue as the time goes on. And this is my bull case for Meta. The worst case scenario for Meta is they rent out their data center. So Meta on Wednesday said it's breaking ground on its latest data center as part of its massive AI infrastructure build out. The more than $10 billion data center will be located in Lebanon, interesting spot, and have a capacity of upwards of 1 gigawatt. That's enough energy to power several 100,000 homes. That is a lot of homes, a lot of energy. And we see down here, this is a news report for another data center. Meta builds AI center the size of 70 football fields. Residents near similar facilities say they're scared to drink our own water. Wow. Those are some big data centers. So the worst case scenario is they rent these out to other companies. And, you really think, how much money would that really make Meta? Look at Iron stock. This is someone else who rented out space. They're up 682% in the past year. That's insane. I'm not saying Meta is going to go up 682%. I mean, this money that Iron is making from renting out to AWS, the contract that they have, is a lot more meaningful to them than what, the renting out would mean to Meta. It wouldn't be a huge part of their business, but it would make them a lot of money. This is my bull case for Meta. This is what I hope happens. This is the first thing that I think will happen. I don't think Meta is going to cave, on CapEx and say, oh, we bought all these data centers and now we can't do anything with them. We're going to, just rent them out. I don't think that's going to happen, but if it does, it's not even that bad. That's the worst case scenario. They have billions of dollars in GPU infrastructure and data centers that they can rent out with, the biggest bottleneck in AI. I was talking about this the other day, is power. So Meta's going to be okay. Mark is the GOAT at stealing ideas. Zuckerberg knows how to steal an idea. We see the lawsuit originally filed in 2004 claims that Zuckerberg stole the idea, the source code, and the business plan for Facebook in 2003. I actually haven't seen that movie, but I've seen clips of it. It looks pretty good. I definitely want to watch that very soon. But Mark Zuckerberg, there's a lot of speculation that he stole the idea for Facebook, but there's no speculation that he stole a few ideas. We see Snapchat, very popular app. Instagram stories, same thing as Snapchat stories, very popular. There's stories on everything now. And then this is the most recent one that's the most impressive, is Instagram Reels. This very much boosted the time that people spend on Instagram. This was very smart of Mark Zuckerberg to make this. We see Instagram Reels is something that just came out. What is it? The exact same of TikTok. People spend adequate amounts of times on both of these. This boosts ad spend, this boosts a lot of things for Facebook. Very impressive, very, lucrative that he's stealing these ideas. So betting against Meta is the wrong thing to do. Meta Platforms, we see right here, 1,481%. all time. This is a company you don't want to bet against. They know what they're doing. They're up very nicely in the past 5 years. They're not outperforming really much, but they're still green. This is a company that's still growing, still huge, and you're getting in at a very attractive price point right here. And all of this AI build out will create a new business segment, I think. And when I was talking about, Mark's the goat at stealing ideas, he stole these two. The next one he's probably going to steal is, you see Anthropic, you see ChatGPT, you see Microsoft Copilot. You see Google Gemini. Where's Facebook's? Facebook has their own, but we're going to see Facebook probably implement some AI, type of AI that could boost ad conversion. This would be very meaningful to them. This would make them a ton of money. This would be a state of the art, type of invention for them. We could even see them post something like, they make generative AI that's one of the best. You're liking your, mother-in-law's story on Facebook, and you're also using generative AI in the same app. Very impressive if you would be able to do that. And I think that we're going to see Mark steal an idea pretty soon here. There's going to be an announcement. But all of this AI build out will create a new business segment. What does Meta have? They pretty much just have their ad spend. Okay, they have Reality Labs, but they're better off without it. We see Azure right here. Microsoft took their AI CapEx spend and they're putting it into Azure, a very fast growing segment of their business. AWS, same thing. AWS Cloud, this is the fastest growing segment of Amazon's business. It makes them the most money. You guys know Amazon would not be the stock it is right now if it didn't have AWS. It would be half the company it is right now. Same thing with Google Cloud. This is where all their AI spend is going. This is just what companies do. Very innovative companies in the Mag 7 just continue to grow, continue to make new ideas, continue to be great. Facebook's kind of lagging in that. Meta is lagging in that, in that aspect of business, and I don't think we're going to see that happen for much longer. My overall thoughts for this is it's a speculative buy on a Mag 7 company. How bad can it be? This diminishes the level of speculation. When I think of a speculative buy, I'm thinking of a penny stock that, there's a 1% chance SpaceX is going to contract with them. I don't think of that when I think of Facebook, believe it or not. Or Meta. I think speculative buy on a Mag 7 company is not that speculative. I think Meta is going to be a very nice stock over the next, decade. I'm a long-term investor. I've had some few short-term investments as of recent, but Meta is definitely a long-term investment. I very much believe in the company, and I think their next business segment could be bigger than ads are right now. They could double their revenue. They could double their profits very easily. I think with this AI spend, they're going to find a new segment of business that we don't even know exists right now. When we see that announcement, it's going to be very bullish for Meta, and I think that's going to happen very soon. This long-term is a good buy no matter what. Even if they rent out their data centers, worst case scenario, this is still a great buy. This is still a cheap company. You're growing at 30% year over year, and you have literally an 18 forward PE. If they rent out their data centers, I think they're going to be, the cost on that is not crazy. You saw what happened to Iron. You've seen what happens to these Bitcoin mining stocks. That's the play I'm taking right now. it's not that far fetched that we see this company grow at maybe 40% a year over the next decade. This company is going to be great. It's a great company at a great price. You can't really go wrong. And to be completely transparent with you guys, I don't own any Meta right now. I'm thinking of getting into the company, maybe even selling my Microsoft, which I'm up 25% on already. I mean, is Microsoft going to rise another 25% before the end of the year? Maybe. But I think Meta right now is a great opportunity. Definitely a stock I'm going to get into very soon. Not sure how I'm going to allocate those funds to get into it, but I just know I need to own some, or not Microsoft, I need to own some Meta stock very soon. So that's all I have for today's video, guys. If you did enjoy, be sure to smash that like button. Also subscribe to the channel. Like I said, thank you guys so much for the support. Very grateful to be a part of your guys' investing journey. This is not financial advice, but I'm glad to be here along the way in your guys' investing space. Thank you so much for 5,000 subscribers. Also be sure to check out the Patreon with the Discord inside of it down below. Also follow the Instagram. We're going to have a post on there today for 5,000 subscribers. Thank you guys so much. I will catch you in the next video tomorrow. Peace.